Welcome to TMS Insights. It's November 2019. Jeremy Hook and Ben Clark in the other seat at the moment and bringing you all the update of the Aussie market. It's a time of year, Ben, where we get the banks have just reported we're in AGM season. That's profit updates from certain companies. It's not the main reporting period, but after a really good 2019, there's a fair bit of interest in what's next.
Yeah. Well, that's a good question. I mean, what's been driving this market recently has been the blue chip shares in Australia, and I don't think there's been, in most cases, a real improvement in the outlook for those businesses. I just think that there's this continual rotation of money into the market, a lot of which is done through things like ETFs and stuff like that these days, and it's going into the big stocks in the index. I think that's...
And so from a valuation point of view, we call that PE expansion.
Yeah.
When the earnings growth isn't necessarily sensational, but share prices rise, that's because investors are putting higher valuations on these future earnings. Now, they will do that, Ben. It's fair to say that that is not abnormal when interest rates and inflation is low. So it's what you would expect.
Yeah, absolutely. It makes complete sense. Analysts will be using lower risk-free rates, and therefore their valuations for businesses will be increasing, which will lead to all the quant buying that we see in the market these days. And the other thing is, what's the alternative? It makes sense. People will pay higher PEs in lower interest rate environments and vice versa. So
let's get into the banks, which full year results for 30 September came out from NAB, Westpac and ANZ. Macquarie as well reported, and we had a quarterly from CommBank. Yeah. We had a couple of capital raisings, which we need to tell clients about. The earnings numbers were probably not collectively a great surprise, Ben.
Yeah.
But the fact that we had two capital raisings probably was.
Yeah, definitely. I think, the banks' results reflected a pretty tough environment for them. Looking backwards, I think there's definitely a sense that things are starting to look a little bit better going forwards. And the other thing is the market was expecting that news. So the share price reactions to it were actually pretty benign.
Yeah.
The Westpac capital raising was a surprise. Well, not to all analysts, but definitely to some. And I think the banks have also rebased the dividends slightly during this period as well.
So just on Westpac there, so the share purchase plan limit this year got increased from $15,000 to $30,000. So Westpac are asking all existing shareholders whether they'd like to buy up to $30,000 worth at $25.32, which is around about $1 under the current share price.
That's right, and on a yield of about 9% when you include the franking credits going forward. So I think our view is this will be on a bit of a case-by-case basis. For some clients maybe who are a bit too underweight the banks, it might make sense just to put some money in.
Yep.
For clients trying to get money into the market, ditto. For those who feel, if the advisor feels there's enough banking exposure, it might make sense to actually sell some Westpac and then to go back into the share purchase plan and try and make a bit of money out of it regardless. So that's something we'll be in touch with.
Yeah, it'll depend on individual circumstances there, but there's something certainly to talk about. Macquarie was a standout.
Yeah.
A great result.
It was a great result. The share price has had a good run.
It raised capital just recently at $120.
That's right, and has got a great balance sheet now to go and do some deals, and it remains to be seen what they're looking at. But, they still will, the market still is sort of pinning its hopes that the guidance that was given will be upgraded in the second half of their year. So we'll see how that sort of plays out. But for me, it's still, one of the best stocks you can own in the blue chip shares.
The REA is a company that reports quarterly and gave us some updated numbers. The US connections obviously affecting their reporting basis, but this one wasn't entirely good. It was a bit of a downgrade. Stock weakened a little bit, but it's been pretty good performance through the whole of this year.
Yeah, and I think again, like the market sort of looking through, okay, we all know that the housing market was pretty average, but going backwards. We know that volumes really dried up around the election and, a lot of uncertainty as to what was going to happen. So going forward, there should be an acceleration, you'd hope, in that business. And I think, everyone, I think initially there was a bit of a surprise on the downside, but then very quickly the market sort of worked out it's probably the bottom of the cycle for the earnings of the business.
Yeah. Good one. The wax shares are well known to have been great performers over the year. They've actually had a couple of softer months and bounced back up again. But separating them out a bit, we had Appen, a bit of an update today, which was really good news. Xero's numbers, quarterly numbers again, very good. So
it's. I mean, these stocks are very volatile. They typically have 20 to 30% falls in their share prices at least once every 6 months, from what I've sort of seen over the last few years. So, what they've actually done over the last few months is actually quite normal for them. But once again, once you've seen the numbers coming through these businesses, the market comes back to them. And Appen's had quite a big profit upgrade today. We've also, the Xero result was very strong. Afterpay had a good AGM. They're doing some very interesting things.
Quiet, which is probably good news for them, given the last couple of months that they've had. Link, some good numbers there, Ben. We spoke about this only the last insights we did, actually. So.
Yeah, they had this. They had their AGM, reaffirmed earnings guidance. Again, said the PEXA business within Link is tracking ahead of their expectations. So I think we're still seeing what could be a really amazing technology business sort of being born under the Link banner. The Brexit sort of thing, it's interesting, it's just dragging on. But if they can get through that, I think that's the biggest sort of headwind in the short term to that business, is we're still trying to work out how that's all going to play out.
Yeah, exactly. We mentioned AGMs. Let's talk about that for a sec. So virtually every June 30 company will have its AGM in the weeks that follow. And so there'll be many each day. Trading updates are now the norm at those AGMs. It comes up almost invariably, and they never used to really.
No.
Companies weren't expected to. But we'll either hear affirmation of what we heard in the August reporting season, or we'll hear some variation. Now, we heard Smart Group today, not one that we own, give that sort of news, and it was very
belted.
Yeah.
Prosper today.
Prosper, a couple.
Yeah.
So there are some eclectic stocks that are going to get that kind of impact.
Definitely.
We know that the economic background is moderate. It's not certainly the best of times or the worst of times. Just a couple of comments about AGMs.
Yeah, well, I think this is a time when, one thing I would say is I think boards are starting to be more conservative giving earnings guidance. We've seen actually some sort of landmark legal cases apparently in terms of how companies should give guidance and how much investors should take it on board. So I think the ranges are getting kind of wider, and also they're probably sort of willing to be a bit sort of softer and hit on the upside as opposed to the other way around. So I think there's a bit more conservatism there. But the other thing I would say is we're still seeing a case where a lot of the big businesses are struggling to find revenue growth. And post the GFC for many years, we saw a lot of costs taken out of businesses and some profit growth come through as a result. I think it's harder going forward now. And so, the challenge is still to find businesses which you think you're paying a reasonable price for, and also where they can grow. Because as we have seen for many years now, those businesses that can grow will get really good share price performance. And probably one of the reasons we've started to look more internationally at other businesses and comparing valuations, what we're paying here to there, and maybe seeing some opportunities offshore.
Yeah, exactly. And we might leave it at that point and refer people to the US reporting season insights that we've separately done for some ideas about opportunities for growth stocks. Well, that's all we've got time for on Insights today. We'll be back for another update in December.